Hello, everybody. This is LJ Walker. Welcome to the new year. It is 2020. Yes. So today I want to talk about why I think the bank sucks. And I think the best way to do it is to actually do a video. This, of course, will not be on the radio show, which is WFNY Radio, and the show is called The Real Estate Regroup Show. This is why I think the bank sucks. Do you see the interest rate right there? That is typical. Some banks are actually lower than that, but that's pretty typical of what banks are giving you as far as interest is concerned. And then, as you know, they charge you all kind of different fees for the money that you worked for and you put in their bank. And if your money goes below a certain amount, many of them charge you even more fees for that, which I don't necessarily think is always fair because, you probably really need that money. Some of these rates are actually not too bad because I know I've seen some that were just 1%. So to see 2 and 1.85 and 1.90, 92, yeah, not bad. But I want to show you something better. This is why I invest. You see, this platform is called Motif Investing, and it allows you to create your own ETFs. The fees are a whole lot lower. The amount of money that you need to place in these ETFs are a whole lot lower. We're talking about, like, if you create an ETF, you don't have to put any money into it. And you can still make money on this platform because it goes by who bought or how many people have bought your ETF. As you can see, this money flow one, 2 people have bought it. I know I did buy this one. I don't know who the other person is because unfortunately they don't tell you who it is, so you can't even thank them. But look at that, 80.7%. Let's go back to the bank. The highest that we saw was what? That's 2.10. Yeah, 2.10. Look, on this one is 80.7. Now, if I was to put money into this, the minimum, 0 is like when you just create it and you want other people to buy it. But the minimum, well, it used to be $250. Now they raised it to $300 for new people. But do you see why investing is so much better? Look at that. Full armor of God, just so that you know, I basically took a Bible verse and I looked at different companies that dealt with the mind, the heart, the truth and peace. And I put them all together in an ETF, and that's how I came up with that. Peekaboo, I See You, that's a healthcare ETF. And basically, it deals with vision. All companies, mainly healthcare companies, who deal with improving vision. And there are also manufacturing companies who make eyeglasses and things like that. I put them all there. This other one is breath, dealing with breathing. This is also healthcare companies. Michael Jackson just happens to be my favorite artist of all time. So yes, I created an ETF dedicated to him. Security has to do with securing your property, everything from securing your property to securing data. And look at that, up 60.9% for the year. Technically Inclined has everything to do with investing in technology, computers, software, etc. 60.3%. Life and Death. This, I have to admit, this is a volatile one. It goes up and it goes down, but it stays up more than it goes down. And Life and Death has to do with companies that bring people on the earth and companies that take people off the earth as well. So yeah, this is Billionaire Invest. I looked at many prominent billionaires and I looked at what they invested in, and I wrote down all the companies that they do, and I created an ETF for that. Again, look at that. Cryptocurrency mining. I created an ETF for this. 11 people bought it. So I make money when I'm sleeping, literally. I don't have to put any money in that fund at all, because look at all the people that bought it. Call me. This has to do with all the telecommunication companies that are out there. And Libra, because I am a Libra. Companies that deal with scales and balancing. Those are the companies there. And as you can see, let me get closer. I have a lot more. And the majority of what I created is actually doing pretty well. Most of them are not doing all that great. Now, I will tell you and warn you, because I believe that there's a recession coming, and other people do too. When it's going to hit, we disagree on when exactly it's coming. I would definitely say just be careful in investing. If you're new to it, please read. I am not a certified financial advisor, so I can't really go into depth as far as how I decide that I'm going to choose stocks and bonds, or I can tell you, but I just can't teach a class on that. I will say that I learned from Evan Jefferson, who is part of the new Black Wall Street movement, and you are free to join his Facebook group. The Black Billionaires Club, though, it is a monthly fee that you would have to pay in order to learn from him. There's also a group on Facebook called Stocks and Stilettos that many people that I know have joined. There's a monthly fee for the inner circle part of the group, but just to join the main Facebook part is free. Again, do your own research, look at your time, see, which one is available to you. But I just wanted to let you guys see the difference between investing in the bank and investing in the market. Okay? Just let you look at these figures again. Money flow, 80.7%. Money flow, just so you know, well, actually, let me click and open up the ETF so that you can actually see what's in the ETF itself. But I chose companies that deal with money or processing money. Many of you are familiar with Square, MasterCard, PayPal, Visa, American Express, Discover Card. You're familiar with these companies. TransUnion, Moody's, Western Union, Equifax. You're you're familiar with these companies. These companies handle money, all right? Now let me go back. Again, you don't have to choose. This is like the latest ETFs that I created. Okay, let me just show you those two. Now 5G, I actually created that last year. And because I know that 5G is going to go up in value, or it's going to be the future, I said, well, let me test it out. And from, let me get closer here, the 30th of 2019 till now, look at that, 3% return. But like I said, it can be, as many of you already know, it can be risky. I was actually playing around and I saw the sandwich debate was me dibbling and dabbling in the chicken sandwich war. So I said, okay, let's see what it's like. Let's see what it's going to do if I invest in all of the companies that are in this chicken sandwich war. Actually, see, Wendy's is 45.3% 1-year return. That's not bad. That's not bad. And the main ones actually did do well. Beyond Meat, I'm not sure. I'm going to have to call the company and find out why there's nothing there. Yeah. And listen, here is where you would add all of the different companies that you want in your ETFs. Basically, you give it a name, and you after you add it, just so you know, you can also delete. Like, for example, I might say, you know what, Arcadia Bioscience. Why do I have this here? Even though it's up 72%, it fell down in price 6.48%. Should I go ahead and delete that? You know, why am I keeping this? That kind of thing. If I wanted to take the chance, because see, some people look at this and say, oh, it's down 10.4%. I'll invest in it anyway because it's cheap, right? Or I'll be able to buy more shares with it being so cheap, and they'll go ahead and they'll buy it. It's totally up to you. Everybody has different strategies as how they want to invest in the market. But I just wanted to broaden the minds of those of you who are not new, who are new to investing, what else is out there. And no, you don't need $1,000 or whatever. You only need $300 for this. Now, I will tell you, if all you wanted to do was buy just one stock, like let's open up, let's see what I have here. Oh, great. Let's open up this one. This one is the 2009-2010 winners. Just to give you a little background about this particular ETF, what I did was I chose all the stocks that and mutual funds and ETFs that did good in 2009 and 2010. Why? Because that was when we were in the thick of a recession last time. So I said, well, let me look at it now and see how well these would do. And look at that. Look at that. DuPont is down. 3M is down. As far as the year is concerned. but everything else is up. So when the recession hits, I probably will be moving my money here. I'm not saying you have to. I'm just saying for myself, I may do that. For myself, I might do that. And if you look here, it gives you a chart for the year so that you can see how it was doing. Right? So guys, yeah, you can definitely delete it. As far as letting other people know what you created, simply just share it on Facebook. Every time somebody signs up to Motif, whether they decide to buy what you have or not, you make money. If they buy your motif, you make money. If you buy your own motif and your motif does well, you make money. And listen, even if the motif that they buy does not do well, like the other one that I showed you, you still make money on this particular platform. You don't make a whole lot of money, but you make a little something on the side. And I'm going to tell you something else. I think I may have mentioned it before. Teenagers and what have you who create their own motifs do better. It's been shown that they actually do better than those who have training, who have Series EE and all of this other kind of stuff, worked on Wall Street and what have you. They actually have done better. So listen, it's a perfect way to take a chance. You can create a watch list. You don't have to like jump in and invest in anything at all. You see? And I like how they break everything down as far as the companies are concerned. But yes, but like if you want to, like, for example, let's say you just want to buy Intel. If you just want to buy Intel as opposed to buying the whole entire motif, it's only going to cost about $5 as of right now. So again, you don't need $1 million to invest, you know, but leave it up to you. You decide. Okay? But this is the quicker way to grow money for a down payment and to grow money for closing costs. This is one of the platforms that I currently use. It was not here back in the day. Back in the day, I primarily did everything through a bank and I had a financial advisor. The financial advisor was free. I didn't have to pay because, well, let me say it this way. Because of the bank fees, I did have to pay because the fees were already built. And that's another thing. The fees were already built in when you are a customer of the bank, right? These were not added fees. These were fees that they put on everybody. But everybody still doesn't use the bank's financial advisor. And it's like, I don't understand that. You're already being charged for those people being here. You might as well just use them, right? Not all banks are that way. Just the particular bank that I had at that particular time, that was how they were. So I say, find out all these fees that you're paying. Is a financial advisor even included? If it is, you might as well use them since they're going to go ahead and charge you for one. Otherwise, there are cities and states and nonprofit organizations out there that will give you free financial advice. Yes, investment advice, not just balancing your budget, not just fixing your credit, but they will give you advice. You can also go to your local public library and read investment books and learn how to invest your money. I do highly recommend Susie Orman's books. I do recommend The Black Woman's Guide to Financial Independence by Cheryl Brashad. There's a whole bunch of other books out there as well that you can read to learn how to invest. I do recommend Rich Dad, Poor Dad series. There is one book, I can't remember which one it was, where he did talk about investing. So, guys, do your research. But I am telling you, as you can see, what the bank returns and what you can get the return you get in the stock market is much better and much greater. And then also, let me say this, because believe it or not, even during the recession last time, I was still investing. And yes, I lost a lot of money, but I didn't move my money. I kept it the same place, and my money doubled. Like when the market came back up, the money doubled. So think about that as well. But again, discuss this with a financial advisor. But seriously, do that immediately, especially for those of you who want to buy a home. All right. Bye for now. Until next time.